All right, welcome back, traders. John Caruso here for the afternoon of January 4th. We're going to do a quick hitter, quick look at the copper market here. I get a lot of questions about copper. We've got a lot of clients that are reading some of the longer term fundamentals suggesting that copper is going to move into a supply side deficit in 23, likely well out into 2024, and perhaps for the remainder of the decade. So wildly bullish fundamentals on the supply side for the copper market, but you also have to take into account the demand side of the market, and clearly what the Federal Reserve is trying to do, and that's of course create demand destruction in the market. We have seen a big breakdown in copper over the summer. Clearly, we did see copper. I'm going to flip over to the weekly chart. We saw copper up over here, take out $5 a pound on the chart. We haven't seen that in a very, very long time. Copper prices then ensued to crash. We did see them crash all the way back towards about 315. You got the warning when we broke that swing low at 403, which happened in, looks like the break of that happened in mid-June, and the market just took a massive tumble on the chart. But then we've got over the last several weeks here, several months, I should say, we've seen this sideways chop with this upward bias, this kind of meander, if you will, on the charts. To where this action right here is now telling me that potentially a longer term base is forming right now in the copper market. So if we zero in on the daily chart, take a look at some of the near term action and what's been happening there. Clearly, you can see it a little bit better. We've got this kind of sloppy inverted head and shoulders that might be developing on copper. This morning, I'm going to put this under the microscope a little bit more here. This morning, we did see a break of this minor swing low here at 372. The market has since recaptured it and has bounced. We're back retesting 375 right now. But that is certainly a warning sign that a break of that minor swing low could suggest that we've got a little more work to do on the downside before perhaps we see something bigger, or perhaps copper has something bigger to say back on the upside, perhaps towards the end of this month, perhaps in early February. So break of that minor swing low is a warning sign that we could potentially test this next major swing low level, which comes in down around 355 on the chart, before perhaps copper has something bigger to say later on this month into February. So we're going to keep that in mind. Some of the other things, factors you got to pay attention to in copper, of course, what's going on in China. We do know that Chinese infection rates have risen over there. They're not expected to actually peak until perhaps the next week to week and a half. But the other factor that you've got to pay attention to is the People's Bank of China meets on January 20th, and they are now there's some rumors going around that the PBOC is now looking at stimulating the economy over there, which I think would certainly help the prospects for copper demand and, of course, copper prices back on the upside. So we're going to pay attention to what the PBOC has to say and any other new developments out of China here over the near term. And then, of course, at the end of this month, we do have a seasonal long side trade that is recommended. I believe that comes in on January 26th, suggesting a high probability during this part of the season that copper prices could push back on the upside. So we're going to take all that into account when we're trading copper. Just to kind of review it one last time here for you, we did have that minor swing low break here at 372 this morning. We did see a lot of CTA strategies stop out of that position, and we're going to potentially prepare for a retest of this major swing low down here at 355 in the near term before that maybe presents a much better buying opportunity in the copper market later on this month, potentially into February. So that's all I have for you here today. Best of luck to everybody out there. If you have any other questions, we are certainly taking requests on any fundamental and technical breakdowns of any markets out there. So feel free to reach out at jcaruso@rjofutures.com. Best of luck. We'll catch you back here next time.